Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and time for our viewer queries. And for that, I have with me Anil Rego, founder, CEO, Right Horizons. Anil, good evening and welcome to the show. Let's take Dheeraj Kumar's question from Himachal Pradesh, and he has sent us his portfolio details, which has a Parag Parikh Flexi Cap. He's investing 3,000 rupees via SIP, Mirror Asset Tax Saver Fund, again 2,000 rupees SIP, Canara Robeco Small Cap Fund, 2,500 SIP, PGM India Mid Cap Opportunity Fund, 1,000 rupees SIP, Tata Digital India Fund with 1,000 rupees SIP. Total amount of SIP that's going every month from him is around 9,500. The target is to have 2 crores after 20 years. So we don't have him on the phone line, but as per the details, the fund selection looks balanced to you, well diversified. Anil, what will you say?
Yeah, so I think he has a combination of, with flexi cap as well as I guess he has his requirement of tax saving. So he has a tax saver fund and also the mid and small cap. So I think there is a bit of a diversification there. The only one that I can point out is, he also has a Tata Digital India Fund. It's a sectoral fund. So if somebody is investing in a sectoral fund, I just wanted to point out that you need to keep in mind that you have to be a little more active. So you have to keep track of the sector. The sectors may they come in, come out. Typically, that's a job that a fund manager does. And so if you have a good perspective of sectors, then you can sort of invest and do. But otherwise, I would suggest, stay with diversified equity funds. That's the only observation that I have out there.
All right, talking about tax saver funds, Anil, how can one actually identify which is the right one for them?
Yes, so you have to look at various parameters. I think definitely one thing that everybody looks at is performance. There, I would say that while you're looking at performance, also look at not just say 1 year, because many a times, say short terms like 1 year, are too short to look at, consistent performance. So I would look at a combination of maybe a 1 year, maybe a 3 years and 5 years. 1 year is still important because, it'll tell you whether a fund is, changing in dynamics, right? So if suddenly something comes right to the bottom, then you hold back on investing in a fund, let's say of a 1 year perspective. But otherwise, I would look at, say, a 3 or 5 year. I will also look at risk measures because, it'll also give you some perspective that, how the fund is doing. Measures like Sharp, which also give the risk adjusted return, are ones that you can do in risk. You can look at the standard deviation and other measures out there. So, so combination of maybe a risk return and the fund house longevity as well. So if if you have consistent funds across segments, then you can say yes, it has been consistent. The track record of the fund managers, with a lot of other qualitative aspects that you have to look at, while doing so.
All right, Anil, let's move on to our next question. Let's take Saundar's question, and he's ready to invest 1 lakh rupees per month in mutual funds for at least 8 years. The investment that he's doing is for a corpus requirement of 5 crores, and he wants to understand the fund mix that he can have in order to achieve this corpus in 8 years.
Yeah, so I would think that he is being a little aggressive out there because the time period is shorter. You're saying in about 8 years, a SIP of let's say 1 lakh will probably give you a corpus of something like 1.6 crores, right? Assuming a 12% return. So that's something that sort of one keeps in mind. So he will be short of his objective of say achieving a corpus of 5 crores. Now the question is, what is it that he can do? Right, to be able to achieve that corpus? He can do two things. One is, he'll have to significantly enhance the monthly contribution upfront, which may not be as practical and possible. So, but it may make sense to look at, can I say from 1 lakh, say increase it to 1.25 or 1.5 lakhs, based on the ability to look at it right now. The second thing one can do is, if he increases his SIP by 25% year on year, which is a bit of a tall ask, right? So then he will be able to achieve his 5 crores in 8 years. So I would think maybe a more practical one, if you can do a combination of both. You increase the base itself a little bit as of now, as much as possible, and then you can do with a slightly lower year-on-year increase. Now, what are the funds that he can invest into? I don't have perspective of, let's say, what is age profile, risk profile, etc. So I would suggest diversifying across various, categories like, let's say, the large cap. You can see a fund like, say, Nippon India Large Cap, or even an ICICI Blue Chip. You can also look at, on the mid cap category, say a HDFC Mid Cap, or a Magnum Mid Cap Fund. You can look at a Flexi Cap, which is the HDFC Flexi Cap, in the Flexi Cap category, and Multi Cap, which is Kotak Multi Cap Fund. Now, the distribution of this will depend a lot on what is, his risk profile. This is why I cannot give what are the percentages you can do right now. But if you're a lower risk profile, then focus a little bit more on large caps and flexi cap funds. But if you can take a higher level of risk, then you can actually go and have a little exposure to the mid caps and even the small caps as well. So that's a broad outline of maybe how we can achieve it.
Last question, Anil, and let's focus on this. Darshana's question. She wants to know what are the top ELSS funds that she can invest in, and she is 25 years old.
Yeah. So broadly, I mean, here at least it's clear that she's young and she can take a higher level of risk. Of course, ELSS funds, just to give you a perspective, they are 100% equity funds. So from that standpoint, because of her risk profile, I think she can also do it. So I would suggest, looking at a long-term track record, and two funds that I would suggest, let's say an SBI Tax Saver as well as a HDFC ELSS Tax Saver. I think a combination of these two funds is what she can do, not just to one fund, because you don't know how the fund is going to perform in the future. So ideally look at least two funds for your investment.
All right, that will be all. Thank you so much, Anil, for being on the show and helping our viewers with their financial portfolio queries. And